Many SOFI investors are feeling frustrated with the fact that SOFI is still down 33% year to date. Robinhood is recovering. It's about to be positive on the year. It's another stock that I own. And there's many stocks that are recovering, but SOFI is pretty much the only one that's still down 33% year to date. I don't believe it's because SOFI is a bad company or because the fundamentals are not great, but we're in a market where the market is rewarding stories. So any company like Robinhood has a story going for it. They have the World Cup with sports betting, they have the Trump accounts, they have so many different things going for them. SOFI doesn't really have an exciting story yet, but I see an exciting story that's brewing with SOFI. I think it's being overlooked. Not a lot of people are talking about it, and I'd love to talk about it and explain it to you in today's video, which could end up being into a massive, massive business for SOFI that not a lot of people are talking about. But if you look at the setup on SOFI, the setup couldn't be better when you have a company trading at its lower end of its multiple at 27 times forward earnings, while earnings per share has been skyrocketing as expected to skyrocket over the next 3 years. And you combine those fundamentals with the fact that the CEO of the company has been buying shares like never before. He bought $1 million at 17, then he bought another 500,000 at $17.32. Now the stock's trading at about $18. So this is very close to his buy. But what I really like to pay attention to is the history of those insiders. So when was the last time the CEO of SOFI was loading up on the stock? It was when the stock was trading at $6 per share to $7, $6.90, $6.50, $6.70. This is when he was pretty much buying every week. And now he's buying up pretty much every week again. So he believes the stock as undervalued as it was when it was $6 or $7. And this is a CEO that gets a lot of stock-based compensation, so he doesn't need to buy stock. But the fact that he's buying back stock here, to me, is very, very interesting. Now, the fundamentals of SOFI couldn't be better. The company has been growing members like crazy, from 970,000 to about 14 million people. They have a massive, massive TAM. They haven't even reached 10% of the adult population in the United States. So they have a long way to go. And this is not including if they even expand internationally. It's the same story with the company's metrics, such as their revenue growth. It has been re-accelerating year on year, which is pretty amazing to me. EBITDA has also been re-accelerating, and net income margin has also been improving from 9%, 13%, and now it's 15%. I think over the long term, it could potentially be 25 to 30%. So this is amazing for the company. Now, many people believe SOFI is going down because of competition, because now we have a lot of competition, especially as we have X Money. X Money is offering some very lucrative features, such as a 6% APY on all cash deposited into X Money with no limit. So this is an unlimited 6% APY on those deposits, and those deposits are insured up to $10 million on FDIC. It's insured, and they get a 3% unlimited cash back if you buy anything on your debit card, or I think it's a debit card, not a credit card. So how could SOFI compete with 6% APY? Well, the way X is paying it is the banks are getting 3.5%, and X is covering the difference, and they're getting to 6%. I don't think this is sustainable. This is mainly to get people into the platform, because the company is losing 2.5% on each person, and they don't even have any profits. SpaceX is not profitable. It's not going to be profitable anytime soon. So this strategy in general is unsustainable, and it's for them to scale members. But SOFI isn't really just a bank. I mean, they make money from bank deposits, but this is not really the business. The business of SOFI is in lending, originating loans, home loans, student loans, which not a lot of companies can do. SOFI is one of the few companies that can do student loans and other kind of loan-like products. So SOFI is mostly a lending business. It's not really a bank deposit business. So X introduces competition, but I think it's not direct competition with SOFI. And I think the TAM is large enough for many different players. Now, in terms of the stories that I told you about that's been happening with SOFI, is SOFI USD, which is a stable coin. The stable coin started like I think 3 months ago at $50 million market cap, and they kept minting more of the stable coin. Now the market cap is about $303 million. And I'm going to explain to you guys a little bit more about the stable coins and all those things. So SOFI is a chartered bank, okay? They have a stable coin. It's worth right now $300 million. The reason why the market cap went from 50 million to 300 million isn't because the coin appreciated. The coin doesn't appreciate. It always stays at $1. But this is because there's much more demand. So SOFI issued more of those stable coins. Now, whenever SOFI issues the stable coins, so those $303 million, SOFI keeps in reserves 1-for-1. So $303 million is the market cap. SOFI keeps in its reserves $303 million, okay? And they put it in the overnight Fed, and they earn about 3.5% per year on this $303 million. So this is a business for SOFI where the more demand there is for SOFI USD, for transactions, or for other matters, for other businesses and companies in general, that will increase the reserves of SOFI, which will increase the yield that SOFI is getting. And it's pretty much little to no risk. There's not much risk with it. It's a pretty straightforward business, and it's a very, very high margin business. Now, if it continues growing on the pace that it's growing at, and we're going to make an assumption here, and we're going to assume that SOFI USD hits a $10 billion market cap. I don't think this is really unlikely. This is a $2 trillion plus market. So if SOFI can get a small stake in it, I think they could possibly do it, as there was only chartered bank doing it. But let's say they get to $10 billion and they get 3.5% a year on those treasuries or on those reserves. That would get them about $350 million a year in net income. $350 million a year is more than what they made in 2024, and it's like 80% of their 2025 net income. So this is how profitable this business could be for them. Now, yes, of course, they still have to maybe give some benefits. So maybe they give you a yield, or they give you some kind of perks, or they share some of the 3.5% with the users or with other people in network fees in general. So that could be a way where it's not 3.5%. But even if they get a 1.5% or 2%, I'm not going to say it's free money, but to me, it's a pretty amazing business where they're minting the stable coin, they keep them in reserves, they collect the interest, they share some of the profits, and they pocket the rest. So that they really cost them that much to do. And it's such an amazing business. Stable coins are very disruptive over the long term, especially with agentic buying and selling. They will use stable coin because they're cheaper on a transaction basis than using Visa and MasterCard. So that could be a big business, big story with SOFI that could potentially, change the sentiment on the stock. And I'm sharing this one from a website. It hasn't been talked about a lot on the call. It could be talked about during the next earnings call. And maybe SOFI then will start to move. The other thing I want to highlight as well is the seasonality with the stock. So normally, if you look at the average, February, March, April pretty much are really bad for SOFI. Then you have May, June, July are much better months for the company, especially July. Now, the reason why you have this setup is because the CEO comes out in Q1 and he lowballs guidance for the year. And once he lowballs guidance, the stock goes down. So you have the first few months as really bad months for SOFI. Then Q2 comes out and the CEO raises guidance for the year. And once he raises guidance, then the stock starts to do well. This is what pretty much has happened every year since it went public. But they haven't done it this time around. They haven't raised guidance, mainly because of potential reports of rate hikes. So first, they were pricing in 2 rate cuts. Now they said they're not pricing in a rate cut. But now the Fed is talking about a rate hike, and Bank of America is saying 3 rate hikes. Now, I personally don't even believe we're going to have 1 rate hike, and all those things could potentially be upside on guidance, but this is why they haven't raised guidance yet, and this is why SOFI has somewhat struggled in 2026. Now, if we look at the company's guidance, they're guiding about 30% CAGR from 2025 to 2028, earnings per share about 42% CAGR from 60 cents to $1.02 to $1.12. This is my valuation model on SOFI. And again, I believe, guys, it's conservative. The stock right now is trading at about 47 times trailing earnings. I'm using their estimate for 2028, which is $1.09. They're estimating between $1.02 to $1.12 for 2028. Then for the 2 years after, I use 25%. I think it's fair. PE ratio right now is 47. I'm putting it at 25 times. So I'm taking a massive multiple contraction. And again, this is on a trailing basis, not a forward basis. On a forward basis, it trades at 27 times, but on a trailing basis, it's more expensive because the company is growing rapidly. So I'm using 25 times earnings. I think it could be higher. If we use those assumptions, I get about $42 per share by 2030, or about an 18% annual return to buy a company like SOFI. Now, if stable coins became really big, the company expanded margins and they trade at 30 times earnings, which I don't believe is unlikely. If that ever happens, then we're talking about $50 per share, or potentially 22%, 22.5% annual return on an amazing company like SoFi. So I believe SoFi is undervalued. It's a great stock, but it does not have an exciting story. I think the exciting story could be the stable coins. And I told you guys how it works. It's an amazing business model, high margin, little to no fees. They just have to give incentives to use the coin, but there's clearly a lot of demand, and they got it from 50 million market cap to 300 million. If they can grow it to 10 billions and they make 350 million a year in net income, was maybe if they take out a little bit, it's 200, 250 million. I mean, sign me up. To me, it sounds like a great business. And that's my opinion on SoFi. Hope you enjoyed it. It was not financial advice. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.